Hey guys, what's going on? Happy Tuesday. Hope everybody had a good Memorial Day weekend. You could hear it in my voice. Not doing so well. So, apologize for the froggy voice on this video. But I had to jump on for a couple things. Might even come up with some while I'm talking to you here live. One thing I had to give an update on is, if you guys have been following for a little while now, back on 1 April, I watched a documentary, Inside Job, from 2010 that talked about the 08 crash, recession, housing market, all that stuff. And basically, the bottom line is, I came out of that saying, that I was going to, almost as an act of penance, read all of the major legislation that led to, that helped set the stage for that crash. And so I got through the Glass-Steagall Act, and I read Glass-Steagall, which is kind of uneventful, because that's the one that kind of supposedly cleaned up the mess with, or like made sure that we weren't going to have a mess in terms of banks, like doing investment activity and depository holdings and stuff like that. So I read that one, got that one done. Then I moved on to Gramm-Leach-Bliley from 1999, which really undid a lot of Glass-Steagall. And I just have to say, guys, I am absolutely stuck on this thing. I mean, I got a lot of other things that I'm kind of tackling and working on, so it's not like I'm not doing anything. But I just haven't been able to get through it. And quite frankly, like the first, I think I've read about a fifth of it, maybe a sixth of it. It's not even apparent to me what it's saying. I thought it would be like very obvious. Like it would just come out and say, like, we're repealing this, and this in Glass-Steagall, and then maybe it would like kind of expand on it. But it didn't really do that, or maybe I was just too tired to notice when I was reading it in the evenings. But it's just a lot of like, I mean, I'm sure this is by design. I mean, I'm sure the whole point is so that somebody can't understand it, but somebody just picks it up off the street. But it was just a lot of like legalese and regulatory language that's just like so dense and so opaque that you just can't like readily grasp what it's saying. You know what I mean? Like it's, and the funny thing is, like no lawmaker read this. You know what I mean? Like, I mean, this is the usual thing. Like they write these bills and they don't actually read them. But I mean, that's understood. But I don't even know if they read a part of it. Like forget about reading the entire bill like you think they would. It almost seems hard to believe they even read any of it, But anyway, guys, so I just want to give you an update on that. That is a long-standing do-out that I have assigned to myself, which is reading Gramm-Leach-Bliley, reading Commodity Futures Modernization Act, reading the Dodd-Frank Act. And it's getting, long in the tooth here, where I just haven't been able to make substantial progress on any of these. I mean, I haven't made any progress with Gramm-Leach-Bliley. So anyway, that's the one, guys, that like I said, it undid all the Glass-Steagall stuff. It allowed banks to do investments and hold deposits and that kind of thing. Other thing, guys, is, debt ceiling, debt ceiling deal, of course, if anybody's surprised by that, you got to start back at square one. We knew this was coming. We knew we were going to get a debt ceiling deal. I think the thing is, are we going to get them to vote for it? I mean, obviously there's a deal made at the high level, but, congressmen and women have to step up and vote for the thing to make sure it goes through. And the question is that going to happen or not? Or is somebody going to sabotage the whole thing and try to sink the whole deal because they're upset, one side got too many cuts and the other side didn't get enough cuts or whatever. But I just think that, so you've been watching. I mean, I feel about this. I mean, the whole system is a wealth transfer mechanism. The whole monetary system of Federal Reserve and the banking system and fractional reserve banking and on and on. So we know that, we understand that. If you spend any time looking at that stuff. And you also know that you have to raise the debt ceiling. Like it's not you have to like lowercase h. It's like you have to capital HAVE, right? Like the debt cycle has to be perpetuated or the whole thing seizes up and there's no more currency and everything deflates as the money is sort of destroyed over time. And I think, like if you guys don't understand what I'm saying with that, I can't explain it as well as I should. So the best thing you can do is go to goldsilver.com and go to episode 4, the greatest scam of mankind, or something like that. It's the biggest scam in mankind's history, or whatever. But it's episode 4 in their primary 10-episode series that explains money and the, inflation and the banking system and all that stuff. So, so I think that, I think that this thing has to happen, but it is strange that individual congressmen and women could sink it. You know what I mean? Like, I know it's got to happen, and I think this is, I honestly just think this is a brinksmanship kind of exercise where certain enterprising congressmen will hold out literally to the last minute, secure as much pork for their states as they humanly possibly can, right? They'll wring this thing dry, and then they'll vote for it, and the debt ceiling will go up, and we'll do the whole thing in January 2025, I think is what they agreed to. So I think that's what's coming, guys. I'm not really concerned that it won't happen, but it is interesting that you get this one last bit of drama. I think my prediction of Friday, May 26th, 8 to 12 p.m., I think in good faith I have to kind of nix that, because even though Biden and McCarthy struck a deal 24 hours later on the night of May 27th, and so I was pretty close on that, I guess it doesn't really count until they pass the thing, and they haven't passed it. So I'm going to go ahead and ixnay my prediction and say that I missed the mark on that. I should have been more clear about that. Like, was I guessing when the principals would agree, or when everybody would vote it through? And I was not clear about that. I think in my mind I was thinking about the principles, but they don't really make, they don't make it happen all the way. They need another step here to happen with the congressional body as a whole voting on this thing. So there's that. So I was just looking at, just thinking over the whole stock portfolio thing lately, and potentially doing that, adding that to the portfolio as a whole, the trust actually as a whole. I looked up the option chain on SPY. SPY is essentially the ETF for the S&P 500, because I just wanted to see what the action was on like certain decline percentages. Like 2 months out. I picked the July options, the July puts for SPY, and I looked at a 10 and a 20% decline on S&P. And the contracts look pretty expensive to me. I mean, I don't know. I've been out of that game for a long time, but it's like $204 for a 10% decline 2 months out from now. And then it was $71 per contract if you looked out if you looked at it at a 20% decline. So, anyway, that was what I saw on the option chain. I didn't really look much steeper than that, but I think that's probably where I would also be looking if I were to go back in there and do anything with that. I'd probably look further out, but further down. So again, but the big thing with options, at least as far as I recall, guys, somebody check me in the comments, is that the time adds the real cost. So the more time you give yourself for an option to strike, the more expensive it's going to be. So I would guess, I gotta go check this, that a 20% decline in July is going to be less costly than a 40% decline, let's say 6 months from now. Like, in other words, even though it's much more unconscionable that we're going to have a 40% decline on S&P, if I give myself 6 months for it to hit, I'm going to pay more than if I only give myself 2 months for a 20% decline to hit. But anyway, there's a lot of factors in there. I mean, there's that whole Black-Scholes equation, I think, how they price options and stuff. So I don't really know what the answer is there. But it was just kind of interesting. Got the blood flowing a little bit to to look and see what those options were trading at, and what was the sentiment? You know what I mean? Like, the people, is it expensive or inexpensive to bet on a big decline in the S&P right now? So anyway, I think I'm going to wrap it up here, guys. As usual, check out the YouTube channel for real sort of structured, in-depth videos. Of course, these videos appear over on the YouTube channel as well once I download them the next day. But really appreciate you guys watching and checking out the content here. And if you guys have any comments, any questions, commentary on what I'm saying, I would love to see it down in the down in the comment section below. So thanks, guys. Have a good night.